Hey everyone, Daniel here and welcome back to another video. Here today, I want to sit down and try and give you guys an in-depth look into whether or not Palantir is worth an investment, taking a look at three main things. One, a look at Palantir's profitability and revenue growth over the past couple of years and looking forwards to 2025. Next, we're going to look at my price targets, looking out to 2025 as well with a bear, base, and bull case scenario. And lastly, I'm going to give you guys my overall thoughts on whether or not Palantir is a good investment. So if you enjoy this video and find it insightful, please consider subscribing and let's get into it. The first thing that we need to talk about Palantir is a look at their income statement. And I'm going to show you guys this right now. Palantir is a very profitable company when it comes to gross profit. Obviously, gross profit is revenue minus cost of sales. That doesn't include spending like operating expenses and sales and marketing, research and development, general and administrative expenses. It just includes the cost of the overall product. Palantir has gross margins in the 70% range, meaning that down the road, once they eventually decrease a lot of these expenses here, they're going to become a very profitable company. And this is the first thing I need to talk to you guys about very in depth. Palantir is a company that is currently not profitable, and it isn't profitable in a big way. But the thing is, their business model makes it so that as long as they're growing very quickly, the chances of them becoming very profitable most likely won't come true. Let me put this into context. Palantir spends a lot of money on acquiring new customers and new contracts. They have a three-phase kind of process that they go through when acquiring a new customer. First, the acquisition stage, then the expansion stage, and then the scale-up stage. Let's go through each of these right now. The acquire stage. This is essentially what Palantir does to acquire their customers, whether that's advertising or going and just telling people about your product. That obviously costs a certain amount of money, and that's that sales and marketing expense. Next, you have the expansion phase. Once a customer takes a look at Palantir and their products, Palantir's goal is to give them a free trial, potentially a one-year trial of their product, to allow the customer to experience Palantir on their own and really see what their product offers. These two phases cost Palantir a lot of money. But the thing is, if a customer ends up going to the expansion phase, the chances of them going to the scale-up phase are very high. And that is where Palantir makes a majority of their money. Scale up. Once a business has been acquired essentially by Palantir, and they're using the product for potentially a few months to a year, the chances of them getting a contract with Palantir for potentially tens of millions of dollars for a certain amount of years is very high. And this is where Palantir makes a majority of their money. And this is why they probably won't be profitable or that profitable until they kind of transition into more of a value-based company. With this, Palantir spends a lot of money on acquiring customers. But over the longer run, those customers pay themselves back 10 to 100x. So although in the short term they're spending a lot of money to acquire these customers, they provide lifetime value, as the chances of them going away from Palantir are very low because of the service and quality of the Palantir product. So it's kind of ironic. As Palantir is growing, they will most likely remain break even because of this acquire, expand, and scale process. But these customers provide lifetime value, and once Palantir shifts to more of a business model that it kind of favors value over growth and obviously profitability, they'll be able to recognize a lot of profits. In my opinion, Palantir, once they start focusing on profitability, will be a company that has net income margins in the 30% range. So when I look at a company like Palantir, I like to look at the potential profitability of the business. That may not come for at least the next few years, if not, maybe not even in the next 5 years. The CEO of Palantir said on an interview that if you're looking for short-term gains with a company like Palantir, you may as well just leave and look for another company. But Palantir is a phenomenal opportunity looking at it from a long-term perspective, because although their kind of method of growth doesn't showcase short-term profitability, over the long run, it is very interesting and very effective in not just bringing a customer in, but keeping them for a lifetime. Now, when we look at a company like Palantir, as I mentioned previously, I like to value them based on their potential profitability. And that is what I think Wall Street is going to be valuing Palantir at. So although currently they might have, let's say, $1 billion in revenue, and out of that revenue, they might lose a couple $100 million, I like to look at the potential profitability. And if I think, as an investor, that a company like Palantir could potentially have net income margins in the 30+% range, I'm going to say, all right, let's assume that Palantir has shifted to more of a value phase, and let's assume potential profitability in that 30% range. This way, I can actually use a potentially like a price to earnings ratio and compare it to other profitable companies within their sector to gain insight into a potential fair value. And this is what I'm going to do with Palantir right now. We're going to go through a bull case, a bear case, a bear case, a base case, and a bull case, and looking at their potential revenue growth and profitability. The first thing I want to tell you guys right now, right off the bat, Palantir has given us one figure looking out to 2025. They say they expect at least $4 billion in revenue by 2025. This is very interesting, as a lot of companies don't even give guidance for potentially the next quarter or the next year. But Palantir came out and actually gave us guidance for the next 5 years. Absolutely phenomenal from an investor's point of view, as it allows us to take a look at the company from a long-term perspective and value it that way. Now, in my opinion, a company like Palantir, if they end up only doing $4 billion in revenue, that honestly is a little bit disappointing in my opinion, as I think Palantir has the potential to beat revenue expectations pretty much every single quarter for the next few years. And given that, I think, potentially $5 billion in revenue or even $6 billion in revenue is actually very, very likely, which is why I'm using this $4 billion in revenue as a bear case. And my base case and bull case actually have different numbers. Now, what I'm looking at here, we're going to assume that Palantir eventually gets to a point where, they have a 30% net income margin. This doesn't mean that by 2025, we're going to have $1.2 billion in net income. In fact, the chances of that happening are pretty dang low and probably won't happen. But investors and Wall Street will most likely take a company like Palantir and value it off of its opportunity, not its current numbers. So, off of that $4 billion in revenue, we get a potential of $1.2 billion in net income. Again, potential. Not right now, potentially in the future. That's what Wall Street likes to look at, in the future. So, I'm going to take a company like Salesforce. Salesforce is a company that, although they don't do the same thing as Palantir, they are most likely the most comparable company on Wall Street when it comes to Palantir. If you have a different company that actually competes maybe in a closer space to Palantir, let me know in the comment section down below. But what Salesforce does gives us a big insight into the potential valuation of Palantir going forwards. So Salesforce is currently trading at a price to earnings multiple of right around 50. They have a trailing price to earnings ratio of 49, a forward price to earnings ratio of 52. We can expect around a 50 for a company like Salesforce. Now, the difference between Salesforce and Palantir is that Salesforce is growing at 20% on a yearly basis, while Palantir is and will continue to grow at over 30% over the next 5 years. So when we think about a company like Salesforce versus Palantir, Palantir is a much smaller company than Salesforce, which means they have a lot more growth ahead of them. So potentially using a 50, in my opinion, is actually very, very conservative, if not even bearish. So what I'm going to do, I'm going to use, again, more of a base case of around a price to earnings ratio of 60. Although that may sound a little bit expensive, you got to consider a company like Salesforce is currently being valued in that 50 range, and given somewhat similar business models and more revenue growth, a company like Palantir wouldn't surprise me for them to potentially be trading at a price to earnings ratio of 60. And obviously, we aren't certain that they're actually going to have that much profit 5 years down the road. So this actually translates very nicely to a price to sales ratio of right around 18. Although that is high, keep in mind, they are a very, very profitable business when it comes to gross margins and will be able to attain a very high net income margin down the road. Now, the current valuation of Palantir multiplied by the share price of $19.75 and shares outstanding of right around 1.87 billion, we get a current market cap of right around $37 billion. Now, what we're going to look at is multiplying this price to earnings ratio by the potential net income of Palantir 5 years down the road. This gives us a potential market cap of $72 billion. a price target of right around $40 per share, a double up from where it is today in the potential bear case. Now, obviously, this is the bear case. Let's look at potential revenue numbers looking out to 5 billion and 6 billion, and then we're going to go through some kind of changes in profitability to take a look at, potential even more kind of growth in share price over the next few years. So let's get into it. Next year, we have the base case. This is looking at Palantir from the potential of $5 billion in revenue by 2025. This obviously uses the same principle of that 30% potential net income margin, a price to earnings ratio of 60, which translates to 18 on the price to sales ratio basis. This gives us price upside, or a price target, of right around $50 per share, or price upside of right around 2.5x, a market cap potentially of $90 billion. And this translates obviously to right around 20% kind of growth year in and year out over the next 5 years. Now, in my opinion, this base case is much more likely from an investor's point of view. In my opinion, as long as Palantir continues to beat on their numbers, $5 billion in revenue is actually very, very likely. Now, where I think Palantir could actually outperform over the next 5 years is if they release a product that is able to be used by every single small and medium-sized business in America. A product that really helps kind of create maximum efficiency within the businesses and goes mass scale. I think in that situation, $6 billion in revenue is actually pretty dang likely. And if they end up releasing a product like that, it wouldn't surprise me to see Palantir grow even more, because the opportunity there is absolutely massive. In my opinion, if they end up getting $6 billion in revenue by 2025, and again using the same principle of right around a net income margin of 30%, this gives us a potential net income of $1.8 billion. Again, potential, most likely not going to happen, but we got to look at the potential here with Wall Street. Same price to earnings ratio and price to sales ratio, we get a market cap of $110 billion, or a price upside of right around a 3x. Right around a $60 price target by 2025. Now, in my opinion, given a company like Palantir, I think it's very likely for them to be trading at $60 per share, even if they don't end up getting that $6 billion figure when it comes to revenue. Here's why. I think Palantir is a company that will always trade very, very rich, and these numbers honestly make it kind of comparable to a Salesforce, which in my opinion is growing significantly less and is much bigger than Palantir. So let's bump these numbers up to potentially a price to sales rate or a price to earnings ratio of 70. This isn't that big of a difference, maybe 15% more expensive, and it obviously bumps up that price to sales ratio to 21. But in this situation, you see, even in the bear case, a potential price upside of 130%, price target $45 per share. And if we look again, try and translate this to both the base case and the bull case, you'll see that in the base case, we now get almost a triple up, a price target of $56 per share. And in the bull case, obviously where Palantir potentially releases more product, we get price upside of 241%, a 3.5x, or a price target of almost $70 per share. So I'm going to kind of put this document in the description down below. And if you want, you can actually download it and kind of just play around with these numbers. Take a look at the different potential revenue growth and potential profitability of the business going forwards. But in my opinion, I'm going to give you guys my thoughts straight up as to what I'm doing with Palantir. I'm currently not buying Palantir. I'm actually pretty fully invested when it comes to the stock market. I don't have too much cash left as the market has just gone down so significantly, and a company like Palantir has been hit pretty hard as well. If you're looking for a technology play that is growing revenue significantly and is favored by Wall Street in a massive, massive way, a company like Palantir is a great stock to buy. You know, they have a phenomenal business model. Their customers love their product. They have a very efficient scale-up model that, although does hurt profitability in the short term, is very, very beneficial when looking at it from the kind of like a long-term perspective. And in my opinion, it really depends on whether or not you like these kind of outcomes. When it comes to a bear case, a bull case, or a base case, you really have to take a look at all of these situations, really think to yourself as an investor, where do I see Palantir potentially being from a revenue perspective 5 years down the road? and trying to price in all scenarios. Obviously, as an investor, I like to look at all potential scenarios, the worst case scenario and the best case scenario. And in a situation like Palantir, you are betting obviously that they will be trading at a bit of a richer multiple, but given their growth and the kind of sentiment towards them from Wall Street right now, and in my opinion, going forwards into the future, I think Palantir is a company that has phenomenal opportunity. So anyways, thank you so much for watching this video. If you have any thoughts on Palantir whatsoever, let me know in the comment section down below. And if you have another company you want me to take a look at as well, let me know down there as well. Anyways, guys, thank you so much for watching this. I really appreciate it, and see you guys next time.